All right, let's talk about the Ripple versus SEC. It feels like we're finally nearing the end of this saga that's been the center of the crypto world for years. So here's late SI hinted at possible changes to its operational status, likely aligning with federal directives if a government shutdown occurs. These budget issues could trigger some major shifts in how things are handled, and the ripple effects, pun intended, might hit the crypto space hard. But before we get into the details, hit the subscribe button, like this video, and leave your thoughts in the comments. Thank you for your support. On top of that, there's a political shakeup with Donald Trump stepping in as the new U.S. president and naming Paul Atkins as the next SEC chair. We're looking at a potentially pro-crypto leadership. This could mark a big turning point for crypto regulations and possibly create a more favorable environment for digital assets. Now, Jeremy Hogan, yes, the lawyer from Hogan has weighed in on X, formerly Twitter. He suggested the SEC should pause all non-fraud cases that don't pose immediate risks to investors. His reasoning. It's a smart move during this transition period, especially with a government shutdown looming and a more crypto-friendly administration on the way. Looking back, this lawsuit began in 2020 when the SEC went after Ripple over its XR token sales. Fast forward to 2023, Judge Analyst Satoris dismissed some key charges against Ripple's executives, but the final decision is still pending. It's like we're stuck in the last episode of a series, waiting for the conclusion. These potential changes to the SEC's operations could also slow down decisions on cryptocurrency ETFs in the US right now. ETFs like Solana are in a holding pattern, but with a new chair supportive of crypto, there's hope that things could move along more quickly. Let's shift gears to XRP itself. It was doing pretty well, climbing to the third largest crypto after launching Ripple's Rulu stablecoin. But market volatility hit hard, knocking XRP down to fourth place. It's currently trading at $2.28 with a market cap of $110 billion, deflecting at 10 dip. So what caused this? A combination of factors. The Federal Reserve cut rates by 0.25, which wasn't unexpected, but Jerome Powell's cautious comments about 2024 caught investors off guard. Concerns about inflation and fiscal policies added fuel to the fire, dragging the entire crypto market down by about 7. Bitcoin ETFs also felt the heat, with $607 million pulled out in just one day from big names like Fidelity and Grayscale. This massive outflow sent shockwaves across the market, making everyone a little uneasy. For XRP, it's been a wild ride. After hitting $2.80 earlier this month, a level it hadn't seen in years, it's now dropped over 20. But this isn't just about Ripple. The entire market is under pressure. Bitcoin itself slid toward $93,000, and altcoins like Dogecoin saw even steeper drops. Despite all this turbulence, analysts are still optimistic about XRP's future. Sure, the short term looks rough, but its fundamentals remain strong. XRP continues to be a key player as a bridge currency and is gaining traction with financial institutions. Plus, Ripple's growth, especially with projects like the Rulu stablecoin, sets it up nicely for the next bull market. As for those ambitious price predictions of $5 or $10, it all depends on broader market conditions, Ripple's ability to innovate, and how crypto adoption evolves. But one thing is certain, this case is far from over, and the outcome could reshape the entire crypto landscape. Stay tuned.